Okay, good morning. Well, I will say good afternoon since it's 12 p.m. Good afternoon, everyone. Thank you for being here. Today, we are recording this session so you guys can see it. If you miss some parts of you have to leave early, you can see it in our YouTube channel that I will share with you the link after this webinar. So I'm introducing myself, Sofia Bahana, Project Manager at Minority Business Development Agency, MBDA. We support minority-owned businesses throughout the country, I will say. We can serve New Mexico and other states too, so that's great. We are part of 41 business centers across the country, and we support businesses on access to contracts, capital, access to market, and one-on-one business consulting. So if you have any question about and you need support, you can reach out to us. I would like to introduce Fran Hernandez. She's here with us. She's kind of collaborating with us on all these webinars that we are doing. So thank you, Fran, to be here. So you can start.
Excellent. Well, thank you. Thank you, Sophia. Good afternoon, everyone. My name is Fran Fernandez. I am the director of the Small Business Development Center at Central New Mexico Community College, the SBDC at CNM. Just want to take a couple of minutes to share with you how my organization serves small business owners in our community. The New Mexico Small Business Development Center program was founded in 1989 and has been serving the small business community across the state of New Mexico for 34 years. We have 18 small business development centers across the state. And we have a highly skilled staff. It's comprised of 63 business professionals that have business management experience and business ownership expertise. Our program is funded in part by the Small Business Administration and the New Mexico State Legislature, and we work through a cooperative agreement with Santa Fe Community College to provide services to small business owners in our community. My center's host institution is Central New Mexico Community College, CNM. And we proudly serve our clients located in our service areas, which include Bernalillo and Sandoval counties. Our mission is to develop skilled entrepreneurs and strong businesses in our state. The Small Business Development Center at CNM provides counseling and training services to help our small business clients start their businesses, to grow their businesses, and most importantly, to stay in business. And some of our client services include our no-cost confidential business counseling to help clients at all stages of business development. We can provide technical startup assistance to help our clients understand the steps of starting a small business, and we work with existing businesses to help them continue to thrive and grow. We provide business and marketing plan assistance. We can review available funding options, helping to assess the best option for our clients. We can also help our clients access market and industry research as part of the planning process. We have several tools available to help with that. We offer bilingual counseling and support services to our Spanish-speaking business owners in our community as well. And to help our clients become skilled entrepreneurs, we do offer low to no cost business education trainings and workshops through our online training portal. And we also have on-demand trainings through our New Mexico Small Business Development Center YouTube channel as well. There's so many advantages to working with the SBDC at CNM, as well as our community partner, the Minority Business Development Agency. As we all are focused, we really want to help you and your small business succeed. So I encourage you all, please visit us online at www.nmsbdc.org to learn more about our program. And you can also register for counseling and training services online, or you can just reach us on our phone number or through an email. The information is there on the screen. We're always available to help assist you with your business needs. And with that, I'd like to turn the floor over to our featured speaker today. We're so pleased to have Larry Donahue with us, and he's going to share some really great knowledge to help small business owners. So take it away, Larry. I'm going to go ahead and stop sharing now.
Okay, thank you. And let me dive in and share. And here we go. Did I do that correctly? Does everybody see business creation at the top of the screen? Excellent. Well, and of course it moves my thing over to the wrong screen, but that's okay. I want to say thank you for everybody. You get to listen to me drone on for about 50 minutes, but I'm going to make it fun, or I'm going to try to. And you think lawyer and fun in the same sentence. I know that That really doesn't work very well. So people like to hear about anecdotes or stories about other people suffering and getting into trouble. And so I'll try to do that as much as I can. I do want to say, though, that it's always interesting trying to do these kinds of presentations because the audience can be so diverse and so varied. And I want to really gear this discussion to folks at the very lowest level. This is going to be 101 type stuff. And if people have questions, I encourage you, ask them in the Q&A or raise your hand, and I will get you, try and get the question out. I'd like to answer questions interactively, but I'll also have some time at the end to answer questions as well. And at any rate, let me tell you a little bit about myself. My name is Larry Donahue. I'm an attorney, a business lawyer. Also, I deal with intellectual property and high-tech issues. We run probably one of the larger e-commerce companies in the state of New Mexico now, selling legal services online. So we have a lot of experience dealing with all the trials and tribulations of doing business online and dealing with lots of clients and customers. So we have a lot of experience to share as well. I've been a lawyer 30 years, and it's not an exaggeration to say we probably have, several thousand clients. We create entities every day. We probably are in the range of somewhere around 50 to 100 new entity formations a week. So we have a lot of experience dealing with entity formation and then all the issues around that, dispute resolution, contracts, and so on. So before I begin, I also wanted to thank the Minority Business Development Agency for hiring us and putting this on. And that also includes the city of Albuquerque. They're the ones paying me today. And so I want to reach out to the city and thank them and acknowledge that the city is trying its best to help small businesses learn, grow, form, and so on. And so I do appreciate the city for doing that. What we are going to do is have me click on my presentation and start from this little slide here. When we talk about businesses and companies, I really want you to think of it from the standpoint of everybody's trying to get you. And we know that's not true, right? There's a lot of really nice, great people out there. But in a crowd of 100 people, how many of them might be out to get you or take advantage of you or your company? I would argue maybe in a crowd of 100, maybe one, maybe none, a crowd of maybe 200. It gets, at some point, there's somebody out there that's going to take advantage of you or your business if they can. And it's that one person that ruins it for everybody else. So what we want to do is just be aware of that. And you need to think about the issues and understand kind of what's going on. So we have you in the center here of a target and your family. And what you want to do is build sort of like shells of protection around you and your family. And the two big ones are going to be a company, an entity, as well as insurance. And why? Because you have these players out there. You have customers. You have ex-employees, disgruntled employees that might try to go after your company, or they're upset at you. They want to get back at you for some reason. You have lenders that might want to come after you for money that is owed, and you need to protect yourself as well. You also have the government, and I represent the government with a nuclear bomb here because the government is all powerful, especially if you don't do things correctly. Another word for not doing things correctly is illegal or criminal, right? Possibly. So you want to be aware of what the rules are, so you don't run afoul of the government issues, because they'll just go through all of this and come after you directly. And here's one great example: cannabis, right? I mean, now saying that, there's a lot of cannabis stores out there. It sounds like it's a legitimate enterprise, but it's still not. It's still illegal with the feds. Now, knowing how the attorney generals and the FBI and the Department of Justice is handling things today, they are sort of turning a blind eye as it relates to cannabis stores in New Mexico, Colorado, California, some of the states that have legalized it. But if you're transporting stuff across lines, if you are doing certain things financially, there's tax issues still, they're going to hit you really hard. So cannabis is not a normal business. And if you're interested in that, that's a whole nother discussion. And I strongly encourage you to get competent advice on what you can and can't do and how to do it properly. But despite these little groups I put up here, there's all kinds of other people that are trying to go after you or could go after you or could create problems for you. Guests, partners, contractors, your competition, even your vendors. So the fortunate thing is, you know, most of everything I have here protects you and your family, but only if you have them in place. So if you do not have insurance, for example, all the little lines that are going and hitting insurance are going to go into your company. And if you don't have a company, guess what? Everybody can go after you individually and or your family. So the goal here is creating layers of protection when you are considering or going into business. And there's 3. I didn't bring up contracts in that circle because then things get a little nuts. But really, you have your business entity, and we're going to talk a lot about business entities shortly. We have insurance. We have contracts, and contracts are extremely important. And while, you know, sure, you can download a contract off the internet, but you got to read the dang thing and make sure it applies to your circumstances. Don't just download a document off the internet that says partnership agreement, and then you say, I got a partnership agreement. You don't. You got to do the hard work and read the darn thing and edit it and modify it and make sure it does what you need it to do. There's not just, you know, creating those layers of protection, but I'm sorry to tell you this, but you really need to learn the issues. And kudos to everybody that is listening to me drone on right now, because you're starting to do that. And that's great. Good job. There's 3 main areas. There's a lot of areas, but the big areas right now in initial formation, or if you want to make major changes to your organization or structure, are these 3. You know, financial and tax related issues, in the business issues, and then legal issues. And once you have all of those, you need to execute effectively. That means you need to execute smartly. You need to try and think about things and the implications of what it is you do. You should be talking to the experts, and you should be trusting the experts. If you are the kind of person that likes to call and talk to 5 different experts to get the opinion you want, you need to rethink things a little bit. You need to develop the trust level for the right person or people that you like, and you shouldn't be out there farming for the right opinion. It's just not a great strategy, number one. And then, you know, I'll tell you, like I said, I've been a lawyer 30 years, and I have a CRM system. It stands for Customer Relationship Management System. Every time I talk to somebody, I put their information in the system, so I know who the heck I talked to and what I said and what the issues were. And then when somebody calls me back, I put them back in the system. I keep track of people, and I know whether somebody's calling me regularly, and you know, they may ask me about a certain thing and then not hire me about a certain thing, but they get in trouble about a certain thing. So am I really eager to help them get out of that certain thing if they would have listened to me to begin with? Not necessarily. So, you know, assume that the professionals you talk to each other, and they also have memories, and they'll remember what you told them 2 years ago. And that's not a great way to develop a long-term relationship. The other thing I want to say that needs to be your goal is to not give up. Going into business is hard. There's a lot of issues. And as I talked about, the 1 person out of 100, there's not so good people out there sometimes. Some people lie, and you want to, make sure you're protected against those kinds of things and develop a thick skin. This is not personal anymore. It's business. So when somebody uses the word you, don't take it personally. They're talking about you. They're talking about your business. So don't give up, fight, keep researching. If you think things aren't working out, read, research, talk to people, figure out how to make things better. But at the same time, give up when you should give up. And what the heck do I mean by that? What I mean by that is, don't fight just to fight. If things are stacked against you, or things are bordering on the legality of things, and you haven't hired an attorney to help you understand exactly what that nuance or contours of the boundary is, then maybe you should give up on that, because you run the risk of crossing a red line that you shouldn't necessarily cross. So the best business leaders are going to be those that are going to know when they shouldn't give up, or when or how to fine tune what it is they're doing. So I talked about experts a lot, and I want you to be on a first name basis with at least these three people: a CPA, a banker, and a lawyer. And I'd also add a fourth, and that would be like a consultant, somebody like at the SBDC West. We have some great organizations here in New Mexico. You really should take advantage of them. Not only can they help you learn, they can introduce you to people that can be very valuable to your business, not just people like myself that you spend money with, but potentially partners, people that might be interested in partnering with you or being a vendor to you, or vice versa. So there's a lot of strategic relationships that these three people and consultants at West and SBDC and so on could provide for you. A quick rule of thumb is, if you're dealing with a tax issue, that's the CPA. If you're dealing with cash flow issues, that's a banker. And then dealing with somebody else, a third party, that's the lawyer. Now, cash flow issues, if you're just starting out or you don't have cash flow issues, that's great, but I still encourage you to get a line of credit right now. Why? Because it'll be there for you when you need it. It's kind of this weird thing, but when you don't need money, you can find it. When you need money, you can't find it. So if you don't need money now, perfect. Go get a line of credit and don't use it. But then it's always there, heaven forbid, for that rainy day. So this talk is really going to be focused on business entities and a little bit about the financial and tax. And that's it. So there's a lot of other aspects to starting a business and managing a business that we're not going to cover here, although we might touch on a little bit, but we're going to have other talks in the future. So let's go with talking about entities. And first, I want to talk about sole proprietorships and partnerships. So the way to do that is to talk about the benefits of an entity. An entity is something that can provide these four things that you can't get if you just start your own business and do not form an entity. So that would be liability protection. As we discussed and I showed you, it provides a layer of protection against you personally from the harms that could happen from your business. It also provides survivability. I have several clients that you would know in the state of New Mexico, dynasties, family dynasties. And they turned out to be all about the family patriarch or matriarch that owned all the locations. And then they died. And then boom, everything froze up. The business ceased to exist, despite the fact that there's 20 signs all over the state of New Mexico and 100 employees. It just seems ludicrous that businesses of this size get into that kind of situation. But if you don't have a business entity, you are the business. And if something happens to you, you are the business. The business has the same thing. So if you become incapacitated, the business becomes incapacitated. If you die, heaven forbid, the business dies, heaven forbid. And that's not so great for your employees and your families. Flexibility is another key thing here. And a lot of you are entrepreneurs. So you may be interested in more than one thing. So an entity allows you to kind of compartmentalize and say, okay, I'm going to do a consulting business over here, and I'm going to do some sort of retail sales or creative thing over here, and you can keep them separate. You can't really do that when you are the business. And then finally, there's a lot of tax advantages. So the pitfalls then are kind of the opposite here, but there's a lot of things you wouldn't even necessarily think of. The one is the liability, personal liability. If you do not have a business entity, you can be liable for the debts, liabilities, and obligations of your company. And maybe you think, oh, that's okay. I'm in full control of everything. I know what's going on. I don't owe any money. Oh, are you sure of that? Like, for instance, there's this thing called New Mexico gross receipts tax that seems to confound and confuse everybody, especially in the world of today's internet. Do you have to collect and pay gross receipts tax if you sell things on the internet? You want to be able to say, no, they're located in another state. Not so fast. It could depend on other factors. And so guess what? Maybe you got bad advice from a bookkeeper or an accountant or something, and you're not collecting as much gross receipts tax as you should. Well, that's a liability if you're wrong, and then you get edited by the New Mexico Tax and Rev Department. So you could have liabilities accrue and attach to you in ways you can't even predict. So you want to be careful. The other big thing that people don't realize is the law in New Mexico is as follows. If you work with somebody else in furtherance of some sort of business activity, that's a partnership. It's a de facto partnership. Even if you don't sign anything, even if it's kind of loosey-goosey, it's a very, very, very dangerous thing for you and New Mexicans, in my opinion. And we're going to talk a little bit more about it, but you can create all kinds of problems with this de facto partnership. The first thing is you can create it without even trying. You don't even need to talk about it. You could just go to the library with your friend and say, wouldn't it be cool if? And your friend is like, yeah, that sounds great. I'm going to go do a little bit of research. Partnership. You have a partnership right then and there. And well, what does that mean? Well, you can have it just by a mere association. And it doesn't need to be specific in terms of what the relationship is or how it works. Just the fact that you guys are working towards a common goal. And the big issue is if your partner does something to hurt someone while in furtherance of the business, you can be held liable, even if you told your partner it was a bad idea, even if you told your partner not to do something and your partner still does it anyway, you are potentially on the hook. Now that hits on another area of law called agency. So this is something you need to be aware of. As a business owner or leader, if you ask somebody to do something or not do something, or don't ask anything, but that somebody does something in furtherance of your business and they're affiliated with your business, you're in trouble. So it could be a contractor, it could be an employee, it could be a vendor, it could be anybody that is relating to your business somehow. Even if you tell them not to do something, your business can still get in trouble if they hurt somebody, if they do something they weren't supposed to, even commit an illegal act or a criminal act. So this is why contracts become really important, as well as relationships. When you get married, right, you have a relationship with somebody. You think about that, don't you? You know, is this person who you want to grow old with? You really spend a lot of time before you jump into a marriage. Well, if you're smart, not like me, I'm an idiot. I'm like a rock star without the good looks, fortune, or fame. I've been married and divorced too many times. So most people are smarter than me about marriages. But my point is that with marriages, you should apply that same thinking to your business partners and in your employees, in the people you interact with your business, for the very same reasons that you think through a marriage or somebody that you would tie yourself with or tie the knot with. And the laws of agency is why, because they can get you into trouble. And so you want people that are smart, think on their feet, have the right moral and ethical compass for your business. There's other issues, though, too, you need to be aware of with these partnerships. We've had issues where, two people get together, they talk about this company, and one person works really hard and makes a go of it. The other person leaves, doesn't do anything, just goes off and, does their own thing. So this other guy builds the company, makes it into something, multi-million-dollar business. And guess what? The little partner comes back saying, hey, this is my company too, and I want my 50%. Kid you not. And this happens more often than you would think. So you could have a problem with this de facto partnership if you don't have something written down, and you really want to get some sort of agreement in place quickly that says we have no partnership at all, which would be great. And in that way, if they try to come back, it makes it a lot harder for them. Finally, there's this issue. Partners are jointly and severally liable for the potential liabilities that would come up in the partnership. And what jointly and severally means is let's say you are just a minority partner because you have a little bit of money and you're helping out a friend. And so you own 10% of this company, but you are a Sandia engineer. You're making a decent amount of money and you're just helping out a friend, and the friend gets in trouble and owes a lot of money. Well, guess what? Even though you are a 10% owner, you could be responsible for 100% of the liabilities of that partnership. It's extremely dangerous. And so you want to avoid this at all costs. So let's talk about entities. So I hope you're hearing from me. Do not do business as a sole proprietorship or partnership. Now, there's a number of people watching me right now, and I bet you we got a couple of you who are doing just this, and you think you're doing just fine, and you're paying people under the table. And so you feel like you're off the grid, not tied to the system, and you're doing well just by yourself. Good for you, but I got to tell you, every month I have a couple of new leads or clients coming to us with that fact pattern. They have been a sole proprietorship or small partnership for years with no problems, have been paying employees under the table, and then guess what? Employees can be like sharks. And we've had situations where you're paying somebody under the table. And what does that mean? Nothing's written down. So that, you get a disgruntled employee all of a sudden saying, hey, wait a minute, you weren't paying me a living wage, or you weren't paying me minimum wage. They lie about what they were getting paid. They also lie because they were just with you 2 months and you fired them because they weren't worth anything. And then they're lying saying that they were with you 2 years, not 2 months. And then their friends join up and their friends say that the same thing happened to them, even though you don't even know who those friends were because they were never employed to you. But now you look really bad because you don't have the right records. You were paying people under the table. I have this happen all the time. It's not worth it. If this is you, you need to stop. So let's start with a new entity. And the first one is going to be a limited liability company, or LLC. And I hope everybody's heard of them before. And the truth of the matter is, probably 95, 98% of the business owners I talk to, an LLC is going to be just fine. And I don't think you need to spend a lot of time trying to think about what is going to be the perfect entity type, because there's entity conversions in New Mexico. So if you pick the wrong entity, okay, let's change it. So LLCs are very inexpensive. They're easy to set up. They have flexible tax options. An operating agreement serves as a partnership agreement between you and the other owners. And in New Mexico, we provide what's called anonymous LLCs, where the ownership information is not made publicly available at the Secretary of State's website. And that's really important for people on the far left or far right. We have abuse victims as clients. We have landowners or people in different industries. They just don't want ownership information out there. And New Mexico is a wonderful state because of that. So LLCs provide all of this benefits. Now, we do have other entity types. They're not as popular as LLCs, but they do have other benefits depending on the circumstances. And one of them is a corporation. And you will hear a lot of people talk about, I have a C Corp or I have an S Corp. And we're going to talk about that a little bit more, because the S in the C in Corp is a tax designation that an LLC can also have. So when somebody says S Corp, you got to be careful. Are they talking about the tax status, or are they talking about the entity type? And again, we'll go into more detail on that in a minute. But these corporations have a more formal structure. The C Corp in particular, or a corporation taxed under subchapter C, has some benefits, some tax benefits. One of them is you can use it as a qualified small business stock. And that is potentially beneficial if you're going to sell your company in a few years. So if you're just starting out, I still recommend an LLC. You know, you're starting out, you got to build up and you got to grow. But if you think that your business is going to grow and you think you may sell it and you think that's a really strong option for you, then you should talk with a tax professional and lawyer and consider changing your company from an LLC to a corporation and then taxed under subchapter C or a C corporation. The problem is there's a lot of tax problems with C Corps. So it's really under the limited circumstance that you think you're going to sell it in the future. And so I touched on this, and now let me go into more detail. Tax status, it's different from an entity type. So an entity type, I talked about LLCs and corporations. And I also talked about partnerships and sole proprietorships earlier. So those are four entity types, although sole proprietorships and partnerships really aren't entities at all. It's just yourself or you and your partners versus a formal structure. And with LLCs and corporations, there are other types, limited partnerships, there are beneficial corporations, but those are a little more arcane, a little more complicated, and they're going to be out of the scope of this particular meeting. But these entities, I would like you to think of them as having a child. And the child is the one that's going to be doing the business. It is going to be the one entering contracts. It is going to be paid. It's going to have a checking account. Not you. Who are you? You're the owner. You're the guardian. You're going to be signing on behalf of that child, but it's the child doing the business. So if the child gets in trouble, it's the child that gets sued, not you. And now, how do we tax that child? The answer is, it depends. You have different options available. And this is where you're going to have to talk to a tax professional, especially when you start making money. But I'm going to give you some overviews now because it's important to have at least a general understanding of the issues. And you'll be surprised how many people I talk to, they set up a company 10 years ago. They're making a ton of money and it's still being taxed the same way it was when it was formed. And they're actually giving away a lot of money to Uncle Sam that they don't need to be doing. So it's important to be aware of these issues, even if you have an existing business. So I talked about the S and S Corp. That doesn't mean a corporation necessarily. It could mean a tax status. So if you talk to an accountant and an accountant says, you want to be an S Corp, just say, I hear you, but just to be clear, are you saying I need to be a corporation taxed under subchapter S, or will an LLC be taxed under subchapter S be satisfactory or not? Get that next bit of detail and find out what your CPA or accountant means. Because an LLC can be taxed under subchapter S or as an S Corp. The other really interesting thing about LLCs is they can be disregarded when they have one owner, or if they have a husband and wife ownership in a community property state, which New Mexico is. So in New Mexico, you can have a husband and wife team partnership own an LLC and have it taxed as disregarded. And why is that important? Well, I'm going to show you. But before I do, please consult with a CPA and not a bookkeeper, by the way. And I'm not trying to knock the good bookkeepers, but they aren't trained and they don't have all the latest rules around these things. You want to talk to a CPA on what the right and best tax status is for your specific circumstances. And also, I should probably say this, I'm a lawyer, been a lawyer for 30 years, but I'm not your lawyer. And everything I'm telling you here, I'm oversimplifying to just give you a general sense of the issues. Everything is more complicated than it seems. And there's a lot of nuances and exceptions and everything else. So I'm giving you the general rules and guidance, but then you really need to talk to the right professional to understand what's really right for your circumstances. With that said, this axis along the top, disregarded, partnership, S Corp, C Corp. Those are the 4 tax statuses for an entity. The next line underneath this is the type of entity. LLC. Only LLCs can be disregarded for tax purposes. LLCs can also be partnerships. And you can have a regular partnership I talked about earlier where you don't have an entity at all, but it's a partnership is the entity type, and you're going to have the tax status as a partnership as well. But an LLC will allow you to have that same tax status, but you have the benefits of the entity in the liability protection, survivability, and other benefits I mentioned earlier. S Corp and C Corp, both LLCs and corporations can have those statuses. So what are those statuses? Well, disregarded is a pass-through status. That means its profits and losses flow up to the owners. It's as though it doesn't exist for tax purposes at all. There's no tax filings. The IRS doesn't care about it at all. Any income and loss, you report on your Schedule C of your taxes. It's like you have a paper route. And the requirements here are you have to have the one owner or a husband and wife in New Mexico, as I had managed. A partnership is also a pass-through type of tax. What that means is the profits or losses of the entity flow through to the owners of the organization according to the partnership documents. And it's very flexible because you can have the circumstance where maybe you're 50-50 in terms of ownership of the company, but person A works really hard and gets more money. That's okay in a partnership. It's not okay in the other 2 that I'm going to talk about in a minute. The only requirement here with a partnership is it has to have more than one owner. S Corp is the biggie. Most people want to be S Corps if the company's making money because there's a lot of tax savings with this. But there's also a lot of limitations that we're going to talk about because S Corp is really important. It's another form of pass-through, which means the profits and losses flow through to the owners, but you have limitations, a lot of limitations associated with how you can do this. Also, partnerships, S Corps, and C Corps, you do have to file a separate tax filing for these entities, both at the state level and at the federal level. And you may be thinking, well, Larry, you said it was passed through, the profits and losses flow to the owners. That's true. Still got to submit a filing and explain where the money's going and how the money was earned and the profits and losses, how they were calculated. And then the partnership and S Corp will issue what's called K-1s, the allocation of profit and loss to the owners. And then the owners will use those K-1s. They're almost like W-2s in a job. It will say how much profit or loss is attributable to you, and then you report that income on your personal income taxes. C Corp is the only tax type or status that is not passed through. It's like it's taxed as its own thing. And that creates a double tax situation in the following way. Let's say you made $100,000 in profit with a company. That company pays the tax on that profit. Then the company pays you, right? Either as an employee or it does what's called a dividend. It issues you a stock dividend. So maybe you and your partner split that 50-50. So you each get $50,000, but the company had to pay tax on that profit, and now you have to pay tax on the dividend. That's what double taxation means with C corporations. So it's not favored. But I mentioned earlier, if you think you'll sell your company in 3 years, you could make a substantial capital gains and you could have substantial savings if you do things correctly. So if I've thoroughly confused you, I apologize, not trying to, but I hope you're seeing the complexity here with tax status and its importance. So let's talk about S Corps briefly, that tax status. The reason is it's important. If your company is making money, the chances are your accountant or CPA is going to recommend that you move to C Corp or S Corp tax status. And here's the reason. No self-employment tax. It's a 15.3% savings on taxes you pay. Now, that there's a big footnote. It's not exactly the way it sounds, but you have to pay yourself a reasonable salary. And that reasonable salary will, I put it way down there. I'm going to talk about these other issues in a moment, but you have to pay yourself a reasonable salary. So let's say that's $50,000, but the company makes $250,000. So the first $50,000 is paid to you as a W-2 wage, and you got to pay normal taxes on that. But the other $200,000 can be a distribution to you, and you don't pay the self-employment tax on it. And just, you know, for your math whizzes out there, 15.3% means $15,300 for every $100,000. So in my example of the $200,000 that is paid out in a distribution, that's over a $30,000 tax savings. It could be quite significant. So S Corps are very desirable in most instances of companies making money, but there's some big limitations here. One of them is it can only have a limited number of owners, 100. Another big limitation is it cannot have non-resident alien owners. And we're going to talk about this a little bit more because the IRS defines this a little bit differently than you would expect when we're talking about immigration issues. Specifically, they're persons that are neither citizens nor legal permanent residents of the United States. And we're going to talk a little bit more about that in a minute. The other big issue here is it cannot have more than one class of stock. What this really means is you got to treat owners the same. And the owners get paid out accordingly to their pro rata ownership interest. And what does that mean? If you have two owners that own 50% each, well, then they each get 50% of the distributions. You can't have one partner making more money than the other partner as it relates to distributions. You could have somebody earning more as a salary because one person maybe has a graduate degree or is working more hours than the other one. That's okay, but not as it relates to the distribution the company gives. Also, you can't have different voting rights or percentages between the different owners. And then finally, as I mentioned reasonable salary, but it's not defined well with the IRS. So you really got to look at it and say, well, what are you? You know, are you a bricklayer? Are you a doctor? Are you, a consultant? What is the average kind of salary for somebody like that? And that's what you need to pay yourself and the owners. And that's W-2 pay. So you got to take out the payroll deductions and FICA and everything else. And the big issue here is if you violate one of the rules, you violate the limitations. The IRS, if they audit you, they will presume you're a C corporation. And just think about all that tax savings. In my example, I said $30,000 of tax savings. And let's say that happened for several years, but now they tax you as a C corp. Guess what? 30, 60, 90,000, however many years the IRS goes back. Now that's additional tax you owe, plus the penalties, plus the interest. So it's a disastrous thing for a business to have the IRS say you didn't do it right and move you from an S corp to a C corp. So let's talk about resident aliens and S corps very quickly. The S corps can be owned by resident aliens, and I think read this here. I think it summarizes it well. For resident aliens, you have what's called a substantial presence test. or you're legally and permanently admitted into the US. The substantial presence test has these two guidelines here. You have to be physically living in the country for a minimum of 31 days a year, and then you've lived at least 183 days continuous within a 3-year period, and then including the calendar year that you're looking at. So there's a lot of nuance to this. And if you're on the rails, you're not sure whether things are working out right or not, please consult an expert on this to make sure you don't violate the rules. There are some folks that are exempt from this, though: teachers, trainees, diplomats, students. There's also the problem that an S Corp can lose its tax status if the substantial presence guidelines aren't met for a particular year, or you've lost a green card. So it's really important to be aware of those issues for the company. And what I want to stress is it's not illegal. I'm not talking about you violating a law. This is just a tax issue, and the entity could lose its S Corp tax status. That's it. It's not illegal. It's not an immigration issue. It's just a tax issue. And the IRS is just focused on tax issues. They're not reporting to the immigration department that I'm aware of. If you talk to an immigration attorney that says otherwise, listen to them. They're going to know better than I am. I am not an immigration lawyer. But what I can tell you is the penalties associated with this relate to the entity itself, not the employees, not the owners, except if you lose the status, then the owners have a big tax bill they're going to have to deal with. So when you lose that S Corp status, it could be retroactive from when the circumstances were violated, the limitations were exceeded. So it could go back many years if you're not careful. And then that means the IRS recalculating all those returns, assuming C Corp tax status. And that means a huge new tax burden on the company as well as the owners. But as I said before, it's not a criminal issue. It's not an immigration issue. And I really want to stress that immigrants, aliens, foreign nationals, everybody are encouraged to own US-based companies. Just because, if you or somebody that is not a US resident and they're interested in investing in a company, that's fine. You can do it. The only issue is this S Corp tax treatment. That's it. Otherwise, by all means, it's open doors for owning companies in the US, and it's encouraged. So let's talk briefly about how to create a company and how to start. And I'm also going to talk about how to change the ownership structure of these companies. But this is high level. I'm just trying to give you a peek under the covers and how to make some of this work. So if you're starting an entity, one is you got to form it. You need to have the formation documents. It's not enough just to go and create it at the Secretary of State. And then finally, you have the tax issues. You need to get an FEIN or EIN. That's the same thing. It stands for Federal Employee Identification Number. And that's with the IRS. In New Mexico, a lot of people are used to dealing or thinking about what's called a CRS number. That no longer exists in New Mexico. It's called a New Mexico Tax Identification Number, or BTIN, for Business Tax Identification Number. And so the CRS number is gone. You now have a BTIN or BTIN. So here is the quick overview, depending on the type of entity type that we're talking about that we discussed. Sole proprietorship. How do you form it? You don't. It's just you. You go do your paper route. That's your business. That's it. There's no formation documents. It's you. And how do you prove ownership? It's how do you prove you own a car? How do you prove that the tools in your garage are yours? Same circumstances here. Partnership, very similar. How do you form it? I talked about the de facto partnership. You do something in furtherance of the business. Boom, you have the partnership. Do you need formation documents? Legally, there's no requirement to have them, but I think you'd be foolish not to. So a partnership agreement is strongly encouraged. It would indicate how much each person owes or owns of the company. It will include, how does somebody leave if they can leave? Then it will have other agreements between the two partners about the company. And how do you prove ownership? I'm speechless. I don't know. You're right. You hear Larry, the lawyer, not telling you how to prove ownership in a partnership. That's the danger, isn't it? If you don't have a written document, how do you prove ownership? I guess we could look at back taxes and the K-1s. Maybe there's a text or something or email that makes it clear. We lawyers make the most money when things are nuts, and partnerships is where we make the most money, right? We get two partners that eventually start fighting, and then they're one person says they own 75% of the company, and the other person says they own 75% of the company. And one person's a narcissist and says, well, they want $1 million to get bought out of the company, or they're willing to pay the other guy $10 to get out of the company. I mean, all kinds of crazy stuff. So I would very much like for you guys not to be in that situation. The way to do that is to form an LLC. And you register that with the state of New Mexico, with the Secretary of State's office. That's what I mean by SOS. Very simple to do. And they will give you the Articles of Organization, which is one of the formation documents you need. But your effort doesn't stop there. You need an operating agreement. An operating agreement is like a partnership agreement. And you could download something off the internet. But what did I say about downloading contracts off the internet at the beginning of this webinar? You need to read it and make sure it matches and meets your needs. And there's a lot of complications there. So I would recommend you not do that. And instead, you look to a lawyer or somebody that can do that for you. And we do offer that as well for a low cost fee, but there's a lot of good providers out there that do as well. Corporations, finally, same thing. Register with the New Mexico State of our Secretary of State. They are going to give you the Articles of Incorporation, not organization. Organization is an LLC. Incorporation is a corporation. But they're not going to give you, and you need, bylaws and a shareholder agreement. And how do you prove ownership? Well, with a corporation, it's the stock certificates and or a buy-sell agreement. So there's a lot of documentation here. And I can't tell you how many people, they stop at forming with the Secretary of State and they don't get those other important documents. And nobody's going to give you a hassle about it. There isn't the operating agreement bylaws police that knock on your door and make sure you have these documents. What happens is you get into a problem, a fight, a lawsuit, a dispute with a partner or owner. And then all of a sudden, all hell breaks loose because you don't have these documents. So how to change ownership? I'm going to just very quickly summarize this by saying documents. That's how you change stuff. But let's go in a little more detail. The sole proprietorship, you don't remove a partner. You don't have a partner. There's no legal issues around it. It's just you. If you do bring in a partner, you no longer have a sole proprietorship. You will have a partnership. And I would recommend, this is a great opportunity for you to do an LLC and use an operating agreement. And we just had a question from Fran. Do you need an operating agreement for a single member LLC? And that's a great question, Fran. And the quick answer is legally no, but you should. And the reason being is if you want to get a bank account, the bank is still going to want to see an operating agreement. Also, it helps for asset protection and liability protection purposes. And what I mean by that is you can pierce the corporate veil. If I'm suing your company and I don't think your company has any money, but I think you have money, I can pierce the corporate veil if I argue you violated your corporate formalities. Well, if you don't have an operating agreement, what corporate formalities are you following? The answer is the statute, which you probably have never read. And so you have a great chance of violating those corporate formalities and therefore allowing me to pierce the corporate veil. So it's good practice to have an operating agreement, even with a sole member or single member LLC. Two other things I want to mention briefly about changing ownership, and that is under New Mexico law, if you have no operating agreement, it's possible to withdraw, meaning if you want to withdraw and leave, you can do that, or you can kick somebody out with a majority vote. That's under New Mexico law. An operating agreement could change that. So an operating agreement can prevent somebody from withdrawing or prevent people from being kicked out without, following some sort of process that you define. With a corporation, it's a little different. You can't kick somebody out, but somebody can surrender their shares under New Mexico law. And that can be changed by the bylaws or the shareholder agreement or the buy-sell agreement. So the question is, are the default laws in New Mexico what you want, or do you want to override them with the appropriate document? And then finally, there's a lot of formality with getting when somebody leaves. Hopefully, there's a purchase agreement. You don't want just people to leave without paying anything, because that could create tax problems for people. So you want to think through those issues. And then, of course, you need to document it. It needs to be written down so that they don't come back later saying, hey, wait a minute, I still own this company. Finally, as I kind of hinted at, never do this verbally. You want to consult with an attorney when you're changing ownership, because depending on the circumstances, whether there's a dispute or debate, you may want a different type of document or whatever to control the change. Also, never walk away from a company if you are one of the owners without getting stuff written down, because that company can run into problems. They can go bankrupt. They could do all kinds of things. Then I'll come back to you if you don't have a strong document saying, sorry, Charlie, I left that company a while ago. And we see that a lot with like tax problems. A company stops paying gross receipts tax or screws up with the income taxes. And then the IRS comes after other owners that they thought they left the company, but didn't do it properly. And they don't have the great documentation to show the IRS that they aren't responsible for the company. And then the IRS is not always the best organization to deal with. And New Mexico tax and rev is even worse. So we want good documentation for everybody, the company, the owners that are going to stay, as well as the departing partners. So that is in a nutshell. And if you guys haven't, my talk, if you guys have questions, I'd love to hear about them. And I do want to tell you about, we're having another webinar in a couple of weeks, March 29th at 9 a.m. And it's going to be Taxes 101 for business owners. We're going to talk about income taxes, gross receipts taxes, withholding taxes, and it's going to be with my tax lawyer who's really good. So I'd recommend that for anybody who's interested. We do have a question here. And Colton, let's say, early on, you mentioned getting a line of credit first is a fallback. You mean a personal credit card? Is it possible to obtain a company credit card before establishing the business? The answer is anything, but you want it in the name of the business, and the new business may not have credit. So you'll have to be a personal guarantee, and that's okay. But what I want is for you to have liquidity in your business for rainy days. Colton has a follow-up question. Is it possible and or a good idea to register an LLC as the very first step toward operating a small business? Yes. I recommend that. You need to have the child first, and then the child is going to go do things like open up bank accounts, pay vendors, things like that. Now, the child may not have any money, and so you will lend the company money, and then the company will in turn pay its debts. Don't write checks directly from you personally to the child or the LLC. You want the LLC to be writing those checks and paying those vendors. Does it help with loan acquisition? Not really. It doesn't have any credit, but it creates a formality, a formal structure. So it can, SBA has some great small, business loans. It takes a little bit of time, but there's a lot of money out there. And by having the entity do it, you're going to have to be a personal guarantee, but at least you can get money into the company, even starting out. There's an anonymous attendee. Thank you, Larry. Your wealth of information, experience. Thank you. And a great presenter. Wow. I appreciate the sentiment, but a multi-member LLC owned by a father and son without a CPA, can they use TurboTax to file? Yeah, you can use TurboTax. TurboTax is okay, but TurboTax is a filing system. It's not strategic. It's not going to tell you, hey, you really should be doing this other. I mean, it does it a little bit, but it's not the same thing as talking to a tax professional to get some strategic advice. And then I find, I get charged, $600 to $1,200 to do my taxes. And it's so much, the tax professional always finds ways to save me money. So I prefer tax professionals versus a TurboTax, but TurboTax can certainly help you with your filings. What do they need to file for the business? So the next question is, what do you file? What kind of tax filings do you do for the business? And the Taxes 101 might be a great way to learn that. But I will tell you, you have withholding you got to deal with. I recommend a payroll service there. It makes things very easy. It's not that expensive. And it depends on the tax status of the entity. So if it's disregarded, there's no tax filings at all. But you do have to keep track of your profits and losses to report those on your Schedule C. So it depends on the tax status of the entity. And then, of course, let's not forget about gross receipts tax. And you want to make sure you have accurate records to be able to take care of and pay those regularly. I hope that answered your questions. And do we have any others? I know we're a little bit over.
Okay, seems like we don't have more questions. That was a great presentation. Thank you so much, Larry. A lot of information to process. So yes, please don't miss the next webinar is about taxes, so that will be great also. Thank you so much, everyone, for being here this afternoon. Thank you, Fran. Thank you, Larry, again. And see you next week.
I will give you the PDF on the presentation that you can send out to people, by the way. I forgot to mention that.
Yeah, thank you, Larry, for reminding me that. Yeah, of course, I will send everyone Larry's presentation and the link so you can review the recording in case you missed something. I have a question. Thank you. Leslie says, thank you. Okay. So thank you, everyone, and have a great rest of your day.
Hey, Sophia, Selena raised her hand.
Oh, Selena, let's see. Selena, you can talk now. Yes.
Hi. I was just wondering, because some of the other trainings were on YouTube, or there was like a link for YouTube, like a recording. Will we be able to get that as well, or no?
Yes. The recording takes a little bit of time to download, but this afternoon I will post it on YouTube and I will send a link along with the presentation too. Yeah.
Thank you so much. This was an amazing training.
Thank you.
It looks like Colton had a question, probably directed at you.
There's a for how many is coming. Yes, Colton, thank you for the question. Yeah, you can. I will put my email. Let me type the answer for you. You can reach out to email. It's the best way I can answer fast because most of the time I'm on events or meetings and things like that. So you can reach out to me. And yeah, we can set up a meeting and talk about it, how we can support your business. Okay, so it seems like we are good now with questions. Thank you. Okay. Okay, now, thank you, everyone.
Thank you.
Bye.